Hello, good evening and welcome to Business Life. Coming up in this bulletin, government unveils palm oil policy to cut $2 billion import bill. How feasible will this policy be in reducing the import bill? We will have a discussion on that. Also in this bulletin, pension fund managers reduce significant investments in government securities and bonds, a move that could come with some challenges for the economy. We shall have a conversation on that. Plus, calls intensify for commercial banks to begin lowering their lending rates following the recent reduction in the reference rate.
The banks have no option than to respond because it's a competitive space now. And if you look at the truth in lending, the proposition that Bank of Ghana is using now.
We have details of these and more for you. Please stay on. Thanks so much for your time. I am Pius Kojo Baka. This evening, I want to begin from the agri sector because Ghana produces 50,000 metric tons of palm oil annually against a demand of 250,000 metric tons, costing $2 billion in imports. Government plans a new industry policy with incentives, seedlings, and import controls. Critics fear it may falter without stronger infrastructure and market safeguards. More in this report.
The Ministry of Food and Agriculture's 2025 report showed that the country produces only 50,000 metric tons of palm oil annually, yet consumes about 5 times that amount, about 250,000 metric tons. The shortfall is plugged by import, contributing to a food import bill estimated at $2 billion each year. To address this imbalance, government says it will introduce a national palm oil industry policy aimed at reviving local production and developing the entire value chain. The plan includes the provision of 1.5 million oil palm seedlings to farmers. Officials argue that these measures will strengthen the sector, boost rural employment, and cut the import bill. But recent trends raise doubts about whether the industry can rebound under the current framework. The Oil Palm Development Association reported that Ghana's palm oil export plunged by more than 50% in 2024, blaming weak government support and the influx of low-cost imports. Farmers and processors warn that unless structural challenges are tackled head-on, new seedlings and incentives may do little to lift production to competitive levels.
All right, so let's have a conversation at the back of this. Joining us via phone is the Chief Executive of the Chamber of Agribusiness Ghana, Anthony Morrison. Anthony, thank you so much for making time to speak to us here on Business Live. And first off, what are your views about government's quest to introduce a national policy aimed at reviving local production as a measure to reduce import bill of palm oil?
Well, thank you very much, Pius, and a very good evening to your cherished listeners. This is a very laudable plan by government. I remember the finance minister clear statement during the budget that there is a need to increase the current production capacity of palm country. I must say that this also falls within government's own broader vision of the 24-hour economy to industrialize Ghana to special economic enclave. Ghana currently imports over $2 billion of palm oil and its related derivatives. And I think that a sector that has the capacity to provide 10 billion worth of income to the country and also to employ a larger number of our youth. This is a welcome. We have over the past years been struggling with the nature of palm production. Palm is a heavy feeder because it extracts a lot of nutrients from the soil. However, we also need to be looking at what are the various innovations we can bring on board. We need to look at the researchers. We need to look at the dynamics. Because, for instance, when you go to Malaysia, Malaysia is having huge challenges with the palm production, okay, as a result of environmental issues and challenges with food security and other areas of affecting. But, palm in itself is also a huge industrial commodity, at the same time, a domestic commodity. So we need to balance the two. What, for us, is our technical advantage? Are we looking at the export market? Are we looking at the industries? And we are looking at also feeding the domestic market. So quite clearly, palm is a major factor in several of the things that we do, both at the manufacturing level, which is industry, even at pharmaceutical level. There are some biscuits and lipsticks that we use palm to do, and a lot of people do not know about that. Even in the aviation sector, we use palm to do a lot of things. And also, when it comes to our household chops, everybody like the copper. We like our favorite green with the red on it. So it's quite clearly and also palm has become a West Africa thing. Okay, Nigeria, Ivory Coast. Now, recently, we know Burkina Faso is picking up strongly. We're also looking at Senegal, and in fact, Liberia is a huge competitor in that area. So we need to look at it. West Africa, we have huge markets for it. How do we strategize? And I think that the Ministry of Finance has clearly stated its commitment to it. And I do know that the governor of the Bank of Ghana has clearly demonstrated its readiness to direct the agriculture sector. And some of these things are very clear. And overly, the president and the 24-hour economy have been talking about the accelerated export development. If you want to accelerate export, you need to find a way to reduce importation, add value, increase production, and make sure that you are competitive with a very innovative research that can be competitive and put you in a market where you have a very strong edge over your competitors.
Let me find this from you, Anthony. Government is saying that when implemented, it targets to cultivate 50,000 hectares under the policy. The first phase really expected to attract $100 million in private investment. And I'm wondering how feasible that would be.
Well, I can tell you from, as an industry player, there are already plans advanced. I do know that the Canadian government previously have been engaging on with regards to the Three Crop Development Authority on some investments into the palm sector. I do know recently with my engagement with the Malaysian High Commission of some interest in that sector. There are quite a lot of interest to say in the palm sector, and when the right investments are done, I believe strongly from data that we have been looking at, we're looking at even more than 100 million from the private sector and also development partners that are interested in that area.
And it's good you've mentioned the Bank of Ghana has also come on board, etc. But from where you sit as a chamber, have you also been of great help to achieve that? And as government goes about with its consultation on the measures?
Yes, through the chamber with its partners in Denmark, we are currently speaking with a couple of them. We are actually going to make a trade tour to Denmark in September as part of overall activities to drive investment, not only to the palm sector. We critically identified about 7 key areas within the tree crop sector that have the potential of turning around Ghana's economy.
What would be your recommendations to government as they move to implement this great initiative? Yes, you've mentioned innovation and what have you. What more recommendations would you table before government?
Well, obviously, looking at what we are facing, agro-industrialization is key. We know that Europe have fought mega factories. Africa requires those mega factories to transform its economy. We have spoken severally in the past about the fact that we need to improve our skills. Recently, a number of African countries are looking to make sure that the TVET skills in their country is over 53%, is about 60%. It is skills that industrialize a country. Education is phenomenal, but skills is transformative. So we need to look at where are our competitive skills in the industrialization narrative. Why do we make sure, like for instance, we're learning a lot from China, we're learning a lot from Japan, we're learning a lot from America in terms of TVET, and Canada and Germany, most importantly as well, are playing key roles. These are industrialized countries. Where are we in the industrialization drive with regards to our competitive skills? If you go to China and you're talking about having access to top-notch skilled people, they can fill 10, 20, 100 stadiums. How many of top-notch skilled people do we have in Ghana when it comes to artificial intelligence, machine learning? Those are now critical areas in industrialization. So not a handful of experts is what we require. We're looking at thousands of experts who are there because the more the skills, the better the drive in the transformative narrative for industrialization.
All right, let's wrap up the conversation with this. We know the trade development policy under the 24 Economies Initiative is ongoing. Where are we with it?
Well, there is quite a number of things that is being looked at. Are you with me?
I am with you.
Okay, so there is quite a lot of things that have been looked at. The research component, the private sector, the policy angle, and clearly government have its plans well structured. We are waiting for the eventual announcement. The President, His Excellency, have already made it clear that we will be looking at a 24-hour economy that is an authority, that is able to utilize the critical tools available to government to unlock potential investment and drive industrialization.
Great.
We need to look at it clearly as a country. Are we going the Singaporean way? Are we going the Malaysian way? Or clearly, are we going the Japanese way? We need to look at what works, what are the homegrown solutions for us, what gives us a very strong edge, and what can our money start and sustain. And overly, where are the markets for all these products that we are going to show up?
Anthony Morrison, thank you so much for making time to speak to us here on Business Live. He is the Chief Executive of the Chamber of Agribusiness Ghana. Away from the agri sector, the total value of pension funds in the country witnessed some significant growth for last year to hit record levels. And this was contained in the latest financial stability report covering the sector. George Viafe tells us more.
The report showed that total pension assets moved from 62 billion Ghana cedis in 2023 to 86 billion Ghana cedis for last year. This actually represents almost 40% jump over a year. It also revealed that growth was primarily driven by enhanced enforcement against employers defaulting on mandatory pension contributions, increased enrollment, and partial government redemption of contribution arrears. The report also highlights favorable return on investment playing a major role. Another development that is worth highlighting is the expansion of private pension schemes. For instance, assets under management when it comes to the tier 2 and 3 went up by 37% to hit 63 billion Ghana cedis for last year. However, in terms of investments, the year under review saw some significant shift from Government of Ghana securities. It is not clear for now how the domestic debt exchange program had played a role, or most asset managers were just complying with directives from regulators to try and de-risk their investments.
And also, we know that pension fund managers are reducing their investment significantly in government security and bonds. More in this report.
2023 total pension assets investment in Government of Ghana securities and bonds was more than 80%. This should mean that out of the 61 billion Ghana cedis total pension funds, more than that percentage was invested in government securities in 2023. However, This has reduced significantly to a little over 72% in 2024. The Financial Stability Report again showed that investment in other state-linked assets like local government and statutory agencies had also dropped from almost 3% to under 1%. It is not clear for now what might have influenced the decision, whether the declining interest rates on the treasury bills market could be a factor, or some of them are reacting to the recent negative impact of the debt exchange program. And pension funds over the years has been a great resource for government when it comes to raising funds on the treasury and bond market to finance its operations. Therefore, one is not sure how this could affect government finances in the coming months.
George, you have filed that report, and it is important we have a discussion at the back of this. I want to bring in the pension economist, Dr. Andrews Ablobi. Joins us via Zoom. Thank you so much, sir, for agreeing to speak to us here on Business Live. Now, even before we talk about the pension fund managers having reduced significantly investments in government securities and bonds, like we are being told by George Yafe, we know the value of pension funds in the country witnessed some significant growth for last year to hit record levels. I want your thoughts on that.
Okay, thank you very much. Yes, indeed. There's schemes actually saw a huge increase in 2023, as your reporter indicated. In 2023, there wasn't that much issue of what we call the same thing that happened in 2020, 2022, 2023. But in 2024, we had a bit stable, what would I say, investment climate. Because if you remember, DDEP took place in 2023. So in 2023, most of the pension fund had some level of turbulence where we had to turn our assets, especially the government bonds that we were holding, into the DDEP. What does it mean? Meaning that the bonds that we were holding, we had to replace them with new bonds that were issued by government at a lower rate and with new terms. For example, we were having schemes such as investments that were running up to 2029, 2030 and all that, but they were all reduced, and bundled into only two asset classes. That was to end in 2027 and 2028. So those shifts that happened in 2023, in 2024, there weren't things like that. So what's happening is that in 2024, there were much, room for a pension fund to be able to, increase investment into other areas, as compared to what happened in 2023, that most of the assets were bundled, as I said, especially the government securities and the local government. The local government assets that we were holding were the Dachi bond and then the energy sector bond. I mean, if you remember, called ESLA.
Yeah.
Those two were bundled into one asset class. So if you see like what your reporter said, you could see that in 2023 or 2024, the asset holding in terms of government of Ghana were around 80 plus. But that's significantly reduced to what? Less than around 72 or so, in 2024. That tells you that, yes, in 2024, most pension funds now begin to look elsewhere, trying to diversify our portfolio into various asset classes. And one of the major beneficiaries of that diversification was going into equities. If you remember, equities such as the listed ones like MTN, had a very good year, especially they did what they call localization, and they did various things, and then they were paying good dividends too. So most pension funds saw them as a very good alternative, to actually push. So it was not a surprise that, the pension holding in equities move, within 1 year, just about 100% increments. Because if you look at it, like your reporter said, data moving from roughly around 2.5 to 5.71 within a short period of time could tell you that so it was a significant jump, of pension fund, all with the quest of what? Looking elsewhere.
All right.
But I tell you that it's not to the advantage of government. It's not to the disadvantage of government. Maybe to the advantage of other businesses. For example, firms like Casapreco also had opportunity. Initially, maybe pension fund wouldn't have gone there. But, Casapreco came into the market. They were looking for funds to expand into other countries, other products and all that. Pension fund gave them some money, So the future probably will say that pension fund has learned and is going to be brighter, wanting to move to real sector, and doing impact investment. And even if we have the opportunity of even giving us to invest offshore too, that will also stabilize, the pension fund returns and others.
And we want to make progress with that. So for you, what do you think could be the implications of these two dynamics on the economy largely?
Largely, I see that the economy would rather be stronger, because what I'm trying to say is that if you look at the equity market, you can see that there's some vibrancy there. You can clearly see that there's excitement in people investing in shares and all that. So the implication in there is that pension funds are expecting more expansion in the equity market. We will want to see more Ghanaian domestic companies listed on the Ghana Stock Exchange, so that we can invest more. And then also investing in real sector will also mean that, there will be expansion, there will be creation of jobs, and then also the economy will grow,
Very well.
So pension fund can drive investment.
Great. Thank you so much. Dr. Andrews Agbobi, pension economist. I truly appreciate your time speaking to us here on Business Live. We are back with a short story. Please. Hello again. Finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoah, is urging commercial banks to lower their lending rates following the recent reduction in the reference rate. He's been speaking to Joy Business.
The banks have no option than to respond because it's a competitive space now. And if you look at the truth in lending, the proposition that Bank of Ghana is using now, once Bank of Ghana releases the MPC rate, it must be triggered into the Ghana reference rate, which was agreed by all the banks when this new pricing of loan was agreed some years back. And so the banks within this competitive space will find it very difficult to insist on a particular rate charge, which may appear to be higher than the anticipated move in terms of direction of the rate. And so it will be very difficult now for a single bank to, by itself alone, decide not to reduce the rate going forward, considering what the other banks will be doing. So definitely going forward, one expects that cost of borrowing should decline across all industry players in the country.
And we have more stories for you when you log on to myjoyonline.com/business. There you go. Government announces plans to cut oil palm import by $2 billion. We got you that story, of course, here on Business Live. Also, total pension fund assets hit 86 billion cedis in 2024. We're also heavy on that here on Business Live for you on that. Let's connect at 8 p.m. with Prime Business. I am Pius Kojobaka.